control. After that, our goods are being taken by a delivery company, and then so they felt that this area needs improvement. They heard that from multiple customers, and they figured out the first thing the customers need is speed. The second thing they need is reliability. Okay, obviously you will not charge cost which is astronomical, so there is a standard cost that is available out there. The third, everybody was experiencing returns because they had to offer returns to make e-commerce sustainable. Returns were 37%. And their study showed to them that it was not just because I didn't like the product. It was also because a wrong product got delivered to me. It was also because my product went to another address. So obviously he'll return, I'll return. Isn't it? So the returns were also happening on account of wrong delivery, right? Wrong address, so things like that. Plus, no company was solving cash on delivery, right? They were taking the cash, was going. So the companies used to get the cash, I think, what did the case say in how many days?
Approx 30 to 60 days.
Approximately 30 days. Okay, and all of this is 11-12 era, right? So we have to go back. So they felt there is room to grow, e-commerce is growing, plus GST was also coming together, so which means India will be one national marketplace. So more logistics movement will happen. So based on all of this, they decided to focus on being a transnational logistics player, right? So, and that's when, what you told me, they started doing all this. And so do you think they created network effects? So what network effects? So firstly, do you think delivery succeeded in creating network effects? Anybody?
Not in 2011-12.
Not in 2011-12. Then as they developed their business, as you read the 10 pages, and now it's listed, so I'll show you good information on them. But do you think it's a network effect or it's a straight pipeline business for e-commerce companies? Good. They're basically a third-party logistics provider. They're a 3PL.
No, I think they created trust. Sorry,
Piyush, please go ahead.
I'm saying that they created the trust. They made their service so reliable that people came to them. And that is what made them create that network, or it created that network effect.
So when you provide, let me elaborate what you are saying. So you're saying you create trust by providing good service, reliable service, and therefore more customers will come to you. That is fully understood and that is fully acknowledged. And so that's how you attract customers. By network effects, I said, we have to look at the analogy of two user groups. And because one is there, the other comes more, and this comes, therefore this comes. So this analogy, do you think it played out with delivery?
Yes.
So can you explain, Siddharth, what makes you say yes?
So they started off with food deliveries. In the beginning, when they started off with Zomato, with the, I would say, success which they gained over there, with specifically delivering on time and quickly, the next food delivery service which was coming from US to India was Uber Eats. They also started looking at delivery for getting the deliveries done.
Right.
So that created one in the food delivery space, and eventually it caught up to various other parties like Amazon and Flipkart, who started having these big billion sales, but they did not have their own logistics environment to get this thing through to the majority of the users in tier 1, tier 2 cities, where delivery had already placed a good footprint, specifically in 2015-16 onwards.
So footprint. Like maybe a sub-warehouse, a warehouse. Footprint in logistics means what? The ability to stock goods, deliver goods overnight.
Fulfilling the orders that are coming in and how they are
Fulfillment
distributed
center.
to the end users.
The last mile connectivity.
Coverage of maximum number of pin codes.
last mile connectivity, knowing where these things are at speed. So yes, now we are talking the capabilities that started to focus on. So own fleet, footprint in national presence. You are saying pin codes and all.
They also tried it with the warehousing. They made a warehouse network with.
They made a warehouse network. They said, yeah. Explain more, Ayush.
With independent, they signed up with independent warehouses, and they published them on their websites that these are the warehouses and these are the stocks they are maintaining.
Very good. So just like the aggregated fleet, they also understood that, look, there are people who already own warehouses. Warehouse is a physical ownership business, right? Somewhere at the outskirts, somebody owns a warehouse. Let's say, Ayush, you own a warehouse. Somewhere at the outskirts of Ghaziabad or outskirts of Gurgaon or outskirts of Navi Mumbai, wherever it is, right? But neither are you getting the business for the warehouse, neither are you managing that warehouse well, because that's not your capability. You're a land guy. You're a construction person. You build it up. People told you warehouse will be a boom, so you build it up. Now you're sitting with that investment, earning maybe nothing much. I, as delivery, smart company, go to you and say, Ayush, give me a warehouse. Come onto my platform. I will list your warehouse as our warehouse. And I will fill it up in 3 months. And you will ask me, so how? I'll say, because I have the demand. I have the e-commerce companies wanting stock points. I have brands wanting stock points. I have enough business. I can go and create a warehouse. I can rent it out. I can create it. But essentially, I will build capacity. You will close down one day. You already have it, and then I will need time. I have the business. You have the warehouse. Can't get business. I have business. I need warehouse. Come on to my platform. I'll give you a short return of 12-13% on whatever you invested. Yeah, whatever be the dynamics. I don't know enough. But what would Ayush do? I was saying, making sense here. These guys are making sense, Plus, I'll say, please manage it for me also. You are the local person. Give me a manager. Be in touch. If you want to come to my warehouse and sit together, please do that. But I'm running it. Okay. So you have the respect also. A lot of people in India own assets, right? But they don't have capabilities of converting that into sustainable earnings. So here are smart people who can come in and say, you have the asset, like transport fleets. They maybe are able to multiply earnings or if they get attached to a good service provider. Otherwise, they will be earning a certain ratio. So on one hand, warehousing management is a capability. And on the other hand, warehousing aggregator becomes one of the ways to create a network effect. The more warehouses I have, now I go to Panasonic and say, how many warehouses do you manage? I manage so many with DHL, or I manage so many with this. I say, I'm giving you 25. I have Northeast, I have South, I have this, I have that. It was all an aggregation that I've done. So imagine the way I will engage with, the Panasonic guy, or Philips, or whoever, Tata Chroma, or whatever, okay? And I'll say, let me do it. And if Panasonic says, no, I will do on my own, you are expensive and all, I'll say, no problem. I'll go other places. Pretty astute what they started doing without fully knowing what they're doing. I think they had not figured all the dots, but they started connecting these dots as they went along. Is what my guess is, Aritra.
So one more thing is that what happens is in most of this e-commerce, we discussed this, there is something called reverse logistics, the return part of it.
Yes.
So and those require a lot of labeling and relabeling based on what is being the reverse one. And those are very costly affairs for
the worst for these brands. Correct. Yeah.
And when a third-party logistic player like Delhivery comes in, it's basically these are the value-added services that they provide apart from the inventory that they are storing as well as managing, and that's where that differentiator starts working.
Correct. So you're very right that there was a standard delivery service, which means fulfillment service, right? either from my warehouse or I give it to you, your warehouse. I'll send you the order list, this, that. It's called fulfillment service. But reverse logistics, cash on demand management, this became the value-added services. Totally agree. And because they were a digitally native, delivery was started by engineers, right? So everything, and this point that the returns that are happening, a lot of them are due to wrong delivery, not choice change. Because I can order a shirt and when it comes, I can change my choice and just return it. Because that's the flexibility the brands are allowing. But a wrong shirt comes, I'm bound to return it. So they looked at data of these logistics companies, and through data, they figured out that there is a portion we can just reduce if we are just good at what we are supposed to do. Right address, right product, right delivery. That was the initial mantra in this company. That we will not do a wrong delivery. That's how they would track. And they showed that performance to their customers. And that's why customers started liking them. That's what I'm told through both primary and secondary research. So in this period of 12 to 15 period, delivery started delivering faster. Real-time tracking and predictive is what. So the one thing all the brands wanted is knowledge about when my item is going to get delivered, so that the customer could get that knowledge. पहले वो सब नहीं होता था ना, like now we know instantly, right? So real-time predicted, and to do this, they built their own tech app, right? Ground up. They didn't borrow a system from anybody. So they used tech and data from day one. They understood cash handling is needed, so they just built that capability. It did exist. So they built that capability, and they were able to show to their customers that when you are working with us, your return rates drop from 37 to 16. Your cash on delivery conversion cycle will move from 30 days to 1 to 2 days. Your speed will be so much better. And if you are so clear in your metrics that you are going to promise the customer confidence, a customer will give you a try, I think. And if you deliver and if you're giving the right costing to your customer, you get repeat business. So then this is how and just like you said, they looked at enterprise customers and they gave them certain value proposition like quality, speed, service, returns, cash on delivery, cost reduction, visibility. To the sellers, they also said, we'll just manage your supply chain, the outward supply chain, right? And therefore, you don't even need to think about warehouses. We will give you that. And to the warehouse owners, they went and said, because we'll bring in volume and skills, we'll reduce the cost of what it costs to warehouse. We'll give you visibility and we'll integrate you and we'll get pan-India business. So they roped in this. The more they roped in this, these people came. This started to be a network effect. The more these people came, the more this was needed. The more this came, the more this got facilitated. Even enterprise customers started to use their warehouse. So it is like nice connections coming together, right? So delivery in a way created a three-side network effect, right? They had enterprise customers, like you said, Amazon, Flipkart, Myntra. They had sellers, Panasonic, Lenovo, Levi, Bata, whatever, right? And they had the choice. They could maintain their own logistics on their own with warehouses, or partner with others, or partner with delivery, right? And then they built they had some warehouse on their own. They aggregated other warehouses. This aggregation will stop because, they would have taken up the space. So now they're building their own and mega size ones. And I should have shown one more, which is a fleet service provider. They built their own fleet. They aggregated other fleet providers to come to them. So I think it's like I should probably move enterprise here and put a fleet also, right? So each one is strengthening or it's encouraging the ability of the other to be on their platform. Each user group is encouraging or reinforcing the other user group to be on the delivery platform. So they're trying to be an ecosystem leader. Are you seeing? It's tough because they are not alone and they're also not they're doing something very efficient, but people might argue it's not rocket science, right? It is not rocket science. It is not creating a new car engine efficiency. It's not creating a new pharma product. And it's also doing it in a space which already had players. So it's not pure innovation also. So it's clearly a fantastic example of a company through tech and operational excellence. It enters into a space which is already there, figures out the weak points of that space for the upcoming growth segment in that space, and starts to solve that one by one. Connect the dots, connect powerful network effects, or network effects can be seen in action here, and creates 8,000 crore, maybe 9,000 crore, I don't know what this year turnover is, business and list itself. And all through the time, they are slowly, growing. So they had 1 crore revenue in FY12. 1 crore, that's the first year of their operation. Then 17, 61, they became 1,000 crore in 5 years. And obviously when you show this, then you can see money will follow you. You can say money is helping you do this, but and I think that's because of this magic. It is certainly because of their capabilities, but it's because they were able to connect these dots very well. They build they are a zero-based builder of their tech stack, with their operating system, their configuration layer, their application layer. It's all data engine based that they've built. They have also built AI intelligence capabilities, location stack, network design, intelligence, analytics. Now, again, through vehicle location, blah, blah, blah. So this is the value add for their speed, reliability, efficiency, productivity. And that journey goes on. Of course, they acquired because it is not a very differentiated space, actually. So it's a behind the curtain service, right? There is no, once I get my goods delivered, I forget who delivery is or who delivered, right? I don't remember the delivery service provider of any of the goods that come to my home. Sometimes I see a bag, a paper bag, but I don't remember that, right? So it's not a very differentiated service at the front end, but it can be very differentiated at the back end, right? Through its capabilities. And if this is listed company, so we have benefit of a lot of good data. I will update this with FY25 once they declare the numbers. But as somebody said, very large PIN code reach, 19,000 PIN codes in India, 33,000 active customers. They've grown their customers in the last 5 years. This is once they listed in FY19 by 7x. Infrastructure grew by 3x. Let's forget all this. Team size of the company, including all their delivery partners and all of that, by 3x. And the revenue has grown from 1,600 crores when they listed to about 8,000 crores, so 5x. Revenue per employee, if that's a metric you want to see for value add productivity, it's grown by 2x from 7 lakhs per employee to 13 lakhs per employee. Revenue per square feet, which is a metric in so-called logistics business, which have warehouses, is at about 4,300. So
So
That's just their sale. Yes, I'll come to their profitability. Yes, Arif.
Just one thing I wanted to say, that pin code reach that they've mentioned.
Yeah.
In India, there is somewhere close to 19,000 odd pin codes. So they are pretty much covered as such.
Oh, India has 19,000 pin codes. Is that what you were saying?
Yeah.
Oh,
yeah, my 21,000 in the case study they have mentioned in the table. India Post is covering 21,000. It means they are almost at 90% of their reach,
yeah.
and soon they may touch that also.
Yeah. Wow. So it's interesting. And just so that yes, Piyush, you want to add something?
No, I want to understand something.
Yeah, of course.
Say the warehouse. I have not quite understood that aspect. I'm trying to understand that there were delivery.
Yes.
The warehouse. How did they integrate? In the sense you said Panasonic. So in delivering, they took it to a, that means warehouse became a hub and spoke kind of a thing. They took it there and then redistributed, right?
Yes. So they are slightly intelligent, or not slightly. They are intelligent supply chain modeling rather than just one algorithm, which is everything goes to a hub and then everything distributes. This is a very simple algorithm. I pick up, it goes into a hub. And from the hub, it goes. Now, what they have said is that we have an intelligent algorithm working. So we will give intelligent instructions. If we feel the order itself can be delivered in the next 5 minutes on the route, our delivery agent will get that message. Because before picking up, we didn't know what address you wanted. So, and just sort of, just give me 1 minute, please. 1 second. I'm just putting myself on mute. Yeah, that's fine. So that's how the warehousing got integrated. No, I think just give me.
Piyush, there is a break.
There is no break. There is something come up. So Rajiv Ji has just put himself.
Small emergency call. Just give me 30 seconds. Just
No issue.
Sorry. Really sorry. My bad. It's a slight SOS.
So you said that algorithm and 5 minutes.
No, that was Go ahead.
Then it would come to warehouse.
Yeah, I'm not saying that. What I'm saying is, it's an interesting example of seeing how different capabilities were built. And they took, and despite the fact that there were other competitors, the interesting thing they did, and they themselves say it, is that we realized if we will take the existing software which exists, then we will start from the same. So we will build it up. That was one of their interesting decisions. The second, quickly they realized that this food delivery and all are very small spaces. Okay, because India was not ordering food so aggressively at that time. Right? They said that the bigger space to operate is enterprise customers. Right? But the enterprise customers, being large, had bargaining power. Right? So they needed cost, not just, they needed reliability and service, but they won't compromise on costs. Right? So but delivery knew there is scale there. So in order to solve the cost problem, they felt I will need to have warehousing in my control, so that can I optimize, and offer them pan-India type service. I may need to have my own fleet because I'm offering them faster service. But this segment, they found it easier to crack. This was more customer acquisition because these were and they went to national brands, which were anyway doing their own business. Nobody started doing logistics because of delivery. They were all managing, but they all had their lead times. It took 10 days for your order to be delivered. Then we said, I'll do it in 3 days. So through promising better service levels, saying, I will manage cash on demand for you, I will manage returns for you, but I will need your whole business. And I have warehouses, or you can integrate your warehouses to me and I'll give you a return. So they kept developing this business model. At least, I believe this is a very good example of a company first digital native company in logistics in our country in this scale, and being able to build a business of this scale. And a business it's a very cost-driven business. It's a thankless business.
It's a very low margin business, actually.
Low margin business, and also thankless. Nobody gives a pat to the delivery person.
Yeah, and in most cases, what happens is, whether it's an Amazon or Flipkart, they provide a RFP of this sort of warehouse inventory that they needs to dispatch and be handled, and 3PL players with their value-added services provide the quotes accordingly. What happens is, basically, delivery tries to get a mandate from this sellers or from enterprise customers, understand what is the point of sale, which are the locations, and what kind of products are being sold within their marketplace. Right. Understand that network, and basis that they identify locations where they would need warehouses and what kind of volumes, what kind of racking spaces they would require. And then from that, they have their team who scout for warehouses, take it on rent based on those requirements. And again, pricings are based on those, as to both while servicing the enterprise sellers or enterprise customers or sellers, as well as to the warehouse owners, what kind of rent that they could give. And basis that, they provide that quote. And it has to be competitive enough that they can compete against Mahindra Logistics or a TVS Logistics or a DHL.
Correct. Very well said. Do you know what is the size of Mahindra Logistics or TVS Logistics right now? I don't know.
Both of them are listed. I don't have the numbers.
Never mind. And they have occupied a bit more of the automotive industrial space.
Yes, Mahindra Logistics and TVS Logistics also have another value-added service similar to this in that chain of customers share that we looked, is that they are assembly line suppliers from ancillary players to the OEM.
Correct. Because both of them emerged from automotive industry.
Yes. Yeah.
And they saw that problem very well. They understood that problem, which is a problem in consumer electronics, automotive, wherever there's engineered good requiring many small parts. Eventually coming to an assembly line could be turbochargers, could be anything.
So those just in time and just in, those are the business models through which they work.
Right. But yeah, we can build on what you said. But you have a good understanding, Aritra. Did you work with them?
They are sort of our customers and such because I am partly into the industrial logistics business as such.
Got it.
Another network effect.
Yeah.
They've got customers sitting everywhere. I mean, vendors sitting everywhere now.
Yeah. Yes.
So as you notice a little bit, Ishad bhai, your point.
Yeah, just to add on to from the aspect of warehousing, we can look at the analogy from Amazon as well. Amazon, they have their own warehouses. So Amazon does two types of business. One is if I am a seller, they will pick it up from me, and then I have all the details of who is going to buy. So I will put in the details. Somebody comes and picks it up, and then it gets delivered. It's sent through whatever the logistic company, and it's sent in.
Right.
And there is another one. What they do is they have a warehouse where I as a producer, a person who's selling things, I can put my products in Amazon warehouse, for which Amazon will be charging me what do they call rent for how much the time I occupy the space and the time for which I occupy. So that way is when you become initially when they have initially, if I am selling something first time, they ask me to put it in their warehouse. From there, it is packed and then delivered. But once when I start getting, the trust is established and I become they have some kind of seller or top-end seller. Once that is there, achieved, they will allow me to ship it from my place. So that is how they make use of warehouse is more a place where they will ensure that the products are there, and then from there it is shipped, and for which the seller has to pay rental charges. So that is how they use the warehouse. But it is an Amazon-owned warehouse. But here, delivery here, I think they believe they take it from even the warehouse. They don't own it. They will take it from a third party and then make sure. For example, Panasonic has to think Panasonic sends 100 TVs to the delivery warehouse, and from there it is shipped. So that shipping is quite easier because it's less than per month. So that's how I think the warehouse comes into the picture.
Right, because not every good or not every service can be a service of one, right? So Piyush orders something, or Rajiv orders something, or anybody should order something, and then it can't just come from the source directly. So the chain is there, plus the customer. We all retail as well as wholesale. Anybody nowadays wants everything faster. We all have been thoroughly spoiled. So now one day feels, tomorrow, why not today? Like that. But we're also patient when we are looking at goods which are exclusive or special, which is not. So for thumbs up, we will not wait for one day. But for a specialized suit, we will wait for a day, or furniture, we'll wait for 3 days. So it's not that we are spoiled, but we have different service levels for different things, and you need to match it now, or choose not to play in those service levels. So interesting story, right, for delivery, I would say. And because it's a very tight business, we were looking at their profitability. Again, this is last year March. So as a year, they were able to make a very small percentage of EBITDA, right? They did make it once in FY22, then they dropped in this year, then they made it back in this year. Now, on the other hand, they say that CapEx as a percentage of their sales, which is remember we were discussing in Disney and Lego case that whatever your critical resources are, whatever your critical capabilities are, the businesses should invest in them to make them better, cutting edge, etc. We should not lose sight of them. But all this comes at a price. So at one point of time, they showed this beautiful chart about how much they were spending on vehicles, how much they were spending on real estate, office equipment, etc. how much they were spending on plant and machinery, which is all their distribution, sorting, automation, and all of that. So slowly, what they are doing. And this number is slowly coming down, but they still continue to invest. And another chart, they showed that their net working capital, which used to be at about 73 days in 20, is now at about 31 days. Maybe this was an anomaly, but 43, 47, 37, 38, now 31. So that also. So they're becoming a scale operation and running efficiently. This is very powerful, right? So all of this improves cash flows. And, they, I don't know how their stock's doing right now. I don't much track that. But an independent study was done by a company which plotted the direct-to-consumer shipments, third-party logistics shipments, and they put delivery right in top of speed and reach and cost-weighted experience, so cost competitive. Then they put Blue Dart, and then they put e-commerce experience here, and Expressbees and Shadowfax. And for those who may have heard, just last week, Delivery has announced the acquisition of Ecom Express. So this was announced on 5th of April, so exactly a week back. So, I think this combined capability will strengthen their position going forward. And I think because of the times and all of that, this is probably not a very high valued acquisition, because Ecom Express was, I think, just struggling a bit. I mean, I don't know enough, but so that is what they have done. Network effects in action, not purely from a pure online business. This is a physical asset business. It's a logistics business. It's a business that provides goods from point A to point B. It has tech and innovation capability, no doubt, but it shows aggregating network effects and those type of things in action. Unique combination of physical and online capability extension. Yeah. Let's take a break for you to reflect a little bit. Take your break. So shall we? I want to now move to pure online type businesses that you and I are used to, quick commerce, and see network effects over there, and open that up for debate and learning. So shall we take a 15 minutes break? Nice clean break. Yeah. Let's start round figure, 4 p.m. We'll start at 4, so just come a minute before 4 p.m.
मैं इलेक्ट्रॉनिक्स नहीं रखा था।
most sincere people around.
I didn't usually take a break. I'm actually reading a book, and it's such a nice book that
Can you share with us, ma'am? What is the name?
So the book is actually called "The Duties of a Cleaning Lady," and
The fiction?
it is not fiction. It's about an author's time dealing with addiction, dealing with adversities of life, and the women around her. When in that period of time, a lot of women didn't have to work for themselves, but these were the class of women who had to work to live. So these are a bunch of short stories about their lives.
Wow.
Yeah, I can.
What's the name of the author?
I'll just get
Show
you
the book. Duties of the Cleaning Lady. Well, that's pretty unique. My partner, my soulmate, as one calls it, she likes to read all good stuff. I read all this, what I bring to you, all this.
The numbers.
Yeah, I have. So my time goes away in this. So I very rarely read some fiction, which my friends tell me you don't know what you're missing. So, but.
So it's called a Manual for Cleaning Women, and the author's name is Lucia Berlin. It's a translation.
Okay. Which is the country where the stories have been set?
Around Germany.
Germany. Wow.
So, and I'm also trying to read a whole lot about product marketing.
Oh.
And, yeah, because I am wanting to understand what do I want to do for the next 10 to 12 years. Like, what is the depth that I want to go in, which function, which
Right.
uses my skill sets in a way that doesn't become boring, because I get bored very easily.
You are not alone. And that's usual. For the people in the room, that's kind of the usual feeling. So, because, white collar is about that. We don't want to get bored also. So, yeah.
Yeah.
Great. No, thanks for freshening us up with new thoughts. There is indeed a wonderful level of material literature available. I don't think we can go through it in our lifetime. So let's see whatever we are blessed to learn from. Yeah, but yes, Piyushji. Yeah.
So I wanted to ask this question. What is the benchmark for success of a company, in the sense that we're saying delivery revenues are 8,000 crore, but profit
is very small.
Does this mean that they're spending too much? What is the criteria for defining the success there? They've acquired a company, so that means they've got investors and taken the money and acquired the company. Where is it leading? They've been there for 20 years.
Yeah.
And at this point of time, after 20 years,
20 years. Piyush. 20 years. They were started, poor guys. They started in 2012. Not
15
20.
years, okay. 11
13 years.
Okay.
13 years in a business is what we call young. It's not even, it's adolescent. Okay. Yeah.
And they've grown, they've expanded themselves, and they're in the red. So where do we draw this comparison? How do we decide success of a company? Should it be having some profit or not?
Of course. So eventually, the two things in a business most essential is profit and cash flows, both. Okay. There is eventually no business that can survive without being what we call a proficon. So we took the word from unicorn because it became a very fashionable word. And therefore we put it on proficon, saying proficon is the goal, right? Now, it's very rare to see, I'm not saying impossible, that in a 10-year period, a company from zero becomes the largest logistics player in any country, which especially a large country like ours. Okay. What is it telling us about the team, the enterprise, the value proposition, the capabilities? It's a tick in all the boxes. First. Second, So what breed, not breed, sorry for my language, what set of people take a bet on capabilities? Large-scale investors, long-term investors, right? The so-called, so the only puzzle in the delivery story is, do they have pricing power? That puzzle is not cracked because generally the companies that are backed by investors for the long term, one commonality we have seen, even if it's in Indigo, that they believe that once the scale happens, they will have pricing power. Because when you have pricing power, you all know what Jio did in July of last year. It was finally talked about because it coincided with the wedding of one wedding in India's first business family. But in one stroke, I think 110 रुपए बढ़ाया था उन्होंने, whatever they increased, and its revenue impact was, I don't know, I forget these things faster, it was 6,000, 7,000 crores, right? So there is a huge impact of profit on scale. And that's why investors love when you get companies which will have dominant scale because they feel they'll be untouched, but they need to have pricing power. Now, logistics puzzle is, will the scale and scope get them to the pricing power or not, or profitability power or not? It's to be played out. We also don't know. So, Piyushji, the reframing of the question, in modern times, we cannot find the 4 multiple choice with one answer doesn't exist. Unfortunately, or fortunately, however you want to call it. There is a coexistence of themes which are playing out. Certainly when it comes to market valuations, there's a coexistence of many themes. There's not one. But in business, we will, because if there's no profit, boom, cash flows will diminish. Investor money will never be forever. But one fundamental has been established by investors is we are willing to fund 2 things. We are willing to fund customer acquisition. We are willing to fund tech capability building. We are willing to fund these 2. And we will fund them if we believe that what you're on the right path. We will stay with you. Which means your modeling shows, but let's say some hiccup happened, no problem, we'll not pull the plug, which means it's another 2-3 quarters away. And, investors have played that out. In the tech businesses, and we'll see 2 right now. Swiggy, sorry. I took Zomato and Swiggy and combined it. Sorry. Zomato and Swiggy, okay. So let me take you through a set of 15-20 slides. We'll pause and discuss these businesses, and we'll keep time in the end to just openly discuss these businesses because in front of us we have this quick commerce playing out. Very significant investments done by all of these players, right? And so let me. Any of you worked in Zomato, Swiggy as a service provider, or anybody who worked in them? Okay, you all know Zomato and Swiggy. 2 years back, we needed to introduce these companies, not anymore. So what do you like, Zomato or Swiggy? Which one do you like? Which one do you use more? Which one do you think your family uses? Or your team members? Zomato, okay. Anybody from Bangalore?
Yeah.
Which one do you use?
Zomato.
Okay. Swiggy will feel very hurt.
Whichever gives a better deal, I suppose.
Yeah, we don't have any special liking, but whoever gives a better deal. Yes.
Also, if you go
Generally,
to
I can have both the apps, but generally the go-to app is Zomato in Bangalore.
generally go to Apple. So wow, Deepinder Goyal, you are in a happy space in this room. Yeah. But there are some diehard Swiggy lovers too. Okay.
Yeah.
I don't know if it's another segment. I'm not used to it. I do use Zomato, but my wife uses them slightly more.
I'm kind of addicted to the way Swiggy ka user interface works. So
Exactly. Yeah.
I actually prefer it over Zomato.
So whichever you've gotten used to it, and it really stays with you, right? Even though if you would be very rational, the ideal rational behavior should be I should open both apps, I should order, but we don't do that. We don't do that, right? Okay. So one is my salute to our salute to the founders of these companies. Founders is not just one person. I think it's the whole ecosystem they create of their partners, their initial employees, everything. I mean, they're all of the similar age group. They're in their 40s. Deepinder Goyal, who founded Zomato, he's about 41, 42. Albinder, who formed Blinkit. Blinkit was Grofers, I think, was Blinkit, right? And Instamart was Swiggy. So they had their earlier names also. Foodie Bay was Zomato, earlier name. Okay. And Sri Harsha, who's the founder of Swiggy, is also about 38, 40. So brilliant, hats off. 7,000 plus people here, 5,500 plus people here. The number would have grown. I had last compiled this data mid of last year, like July, August, September. Okay. So we love them because of what they do for us, right? They just have penetrated our day-to-day needs, especially urban-centric audience. And every job that we want to get done, order food, go out, event, whatever, delivery, in fact, Swiggy's motto is to say, we elevate the quality of life with unparalleled convenience, right? So, and it's one master app that you can do food delivery, you can do quick commerce, you can do dine out, the Genie service, just pick up, drop, and blah, blah. And Zomato is also doing the same. It's just that it's doing it through 3 apps. They're doing Zomato itself and Blinkit, their quick commerce app, Hyperpure, we'll talk about it. And District is the Paytm ticketing business they bought to create something like a Book My Show. So, and they're basically saying we are powering India's changing lifestyle. So both are very similar in what they are doing. And they have multiple lines of business. So the large line of business that is common, one is food delivery, Zomato and Swiggy, and one is quick commerce, because these are large, Blinkit and Instamart, right? With me, all of you, right? Yeah. Okay. Now, part of their success can also be related to the way we have been evolving in the last 5-7 years. Okay. So I thought we can just, and all this, but maybe you can just see it once. And this information, one is available with me. I mean, in this deck, you can freely get it. I'm not using any rocket science information, but bringing it together. So India's GDP comparison over 5 years shows that the personal consumption grew at the rate of 9% on a macro level, which means aggregated, which means that it grew at a much higher rate than our economy. As you know, economy went through a growth of 6 to 7%. So this was 9%, which means consumption is one of the large growth engines. Maybe also that's why in the recent major global trade announcements, we've been largely, okay. I'm not saying okay, but we've not sort of jumped like up and down. Also, oil has come down over the last few few months. So it's actually very good for us. The oil coming down is very good for us, but I don't want to digress right now. The other is the pyramid of India that is growing. There is the high income, which is people earning, say, more than 11, 12 lakhs a month. There's a middle class, which is up to that. And then there's a lower middle income. And I think everybody is going after this segment. And these are households, right? So multiply them by 4. So we have 400 households in our country right now. 10% or 12% are high income. 20% is upper middle class and 31% is. So this number in 2018 is the engine that we are all going after. And hopefully the low income is reducing. It used to be about almost 50% of our households. It's now 37%. It'll go down to 27%. And these are some macroeconomic projections. We'll be a little bit here or there, but all good. So we also say India is 1, 2, 3. You know this theory of India 1, 2, 3? Right? So India is in Eastern Europe. So Delhi, Bombay, Bangalore, Hyderabad is nothing but an Eastern European country. That's India 1, right? Then there is an India 2, which is an Indonesia, right? And then there's an India 3, which is a low performing, income level wise. So, and therefore in India, all the 3 coexist, right? So, and you can see that stark. So there's a theory of India 1, 2, 3 playing out. And a lot of the digital business that we are doing or e-com, etc., that we are thinking through is all about India 1 and 2. Right? And within that also, India 1 is very large in terms of net value, not in terms of numbers, because of their purchasing power. Okay. And I'll show you that through a funnel. I think it'll come. In addition, there is also demographic changes that have happened, which is the number of nuclear households. We are about, are expected that 70% of our country will be living in a nuclear household. Today is about 60%. Contribution of cities to our GDP will, and this is, today is about 66 or let's just say 65%, expected to grow to 80. So India's large GDP is nothing but the city's GDP, right? And female participation in our workforce is also 37% now. Now, think about all this, which is nuclear living, cities, men, women, both working, double income, etc., etc. Working is not just working in a job. It could be just participating in the economic. So all of this, therefore, gave need of a new lifestyle, which got powered by the penetration of digital. So this is what we call the India consumer tech funnel, right? And this has changed a bit from this number, but it's largely in the same. So the total internet users in our country, say 820 million, 700 are watching it for, I'm showing you the funnel, right? So 700 consume audio, video, OTT, right? So they consume on the internet, right? And 623 million communicate through the internet, WhatsApp, email, etc. 575 are active on social media. 435 million are active on online gaming. The people who look at net commerce overall are 420 million, of which online shoppers are about 300 million, and of which the power shoppers are just about 16 million in the country. So this number is slightly grown. And what I will do is, when I will distribute the deck to you, I'll put the latest numbers. So, but you can say this is about 300 million right now. So, and this is about 16, 17 million. So what the entire e-commerce is doing is catering to them. And a lot of it is here, right? But it's vibrant and growing, no question. Yeah, this is another very good information we got. This we got from Swiggy's pre-listing documents. Okay, so this is dated last year, July, August. Swiggy got listed in November, so the prospectus, I think, came online in August, September. So it's very good. So I'll take you through the data. Okay. This x-axis shows monthly online ordering frequency per million transaction users, something like that. Monthly transacting users. Okay, so frequency, right? Online penetration of different product categories, whether it's ride-hailing, food services, groceries, fashion, beauty, and personal care. And the bubble indicates the size of the amount of order value. So food services is the highest online frequency-wise ordering. It's even higher than ride-hailing. So food services followed by ride-hailing, followed by grocery. This is where the frequency of transaction is the highest. So ride-hailing, we know Uber, Ola. Food services and groceries is now kind of Zomato, Swiggy, Zepto, so on and so forth. Fashion and pharma comes next, followed by beauty and personal care. My guess is this is moving much ahead in terms of online beauty and personal care. And then there's electronics in terms of ordering frequency, right? Of course, if you look at the size, fashion as a bubble, which overall gross order value, fashion is largest because of the ticket size, followed by electronics, and then followed by food services, grocery, and ride-hailing, right? So it's a beautiful chart. You can look at it in multiple ways to get a sense, right? In terms of a value of an order on an average, electronics ranges 4,000 to 5,000, beauty and personal care 600, fashion 700. My guess is this would have grown more because of inflation. Pharma up to 1,000, ride-hailing 250, food services 400 to 450. This was last year. I'll show you Zomato and Swiggy's number latest. What do you think is average food service order right now? Approximately. Average. You could be ordering 2,000 or 200, but on an average.
700 to 1,000, I guess.
Yeah, it's still a bit on the lower side than 700, Ayush. It's still about 600 on an average, right? Grocery we'll check. I don't have the latest number, but this has gone up. So average grocery orders value was 400 to 500 till last year middle, but significant penetration by quick commerce and increasing of the assortment in quick commerce. We'll see the quick commerce numbers because that's just not grocery, right? It's a mix of many things. So, I could order a kurta on quick commerce now, or stationery and so on and so forth. So, what are the number of annual transacting users as I showed to you in the other chart? Food delivery and ride-hailing about 80 million and quick commerce about 20 million. These are million users annual, right? Let me show you probably a better retail chart. This is a nice piece of information. India is about a 1 trillion consumption market, retail market. This is 1 trillion Indian rupees. Now, it's 61% is grocery, fashion, electronics. So this is by categories, okay? And if you take the same number and you split it by channel, 80% is the unorganized channel. We can also call it GT, general trade. 13% is organized retail. You can also call it MT, modern trade. 6% is online, and just about 0.3% or 0.5% is quick commerce. So there is a very large India still existing in general trade, but these categories are growing very fast. And what has happened in our evolution of retail in India is from traditional from general trade to modern trade to e-commerce, we stabilize at about 1 week delivery, then the slotted next day delivery, then the same day delivery, and now it's the quick delivery, right? So 20-30%. So the delivery part is moving quite strong in terms of I don't know about China, but these are very, very, we don't have such levels in other countries. And then the Swiggy prospectus also gave us this very good data, which is they put down grocery, fashion, electronics, pharma, and beauty. So all the non-retailing, non-food delivery categories. They put down their size and they put down the different. So they said the online penetration in grocery is just 1 to 2%. Fashion is almost 20% now. Electronics, 25%. So good pieces of information. And what are the kind of growth, etc. So bottom line, in terms of quick commerce market, which is about 2.4 billion right now. Sorry, 2.8 billion right now. It's expected to grow at a CAGR of 60 to 80%, which is kind of doubling every 2 years in size, quick commerce on itself. Now, with this background, we'll put away the background that all this information is available, but we'll see it in action in Zomato soon. Okay. Any broad questions on that pieces of information? I was just setting the stage of why these companies are so much in the news, what's happening, etc. Okay. Network effects. That was our topic today. So, do you all remember how Zomato started? Zomato, how did it start? Anybody remembers?
They started by listing restaurants on their sites and
Correct.
gave number out.
Correct. It was not a food delivery business from day one, right? It started by providing you content. So basically, it was a directory of food menus, right? Yeah. That's how this started. Does anybody know the funny story of how it started? Anybody knows? So Mr. Dipender Goyal used to work in a company called Bain, right? It was a consulting firm. He'd come out of IT and along with the others. Now, these companies are very famous. People are working there till 9 p.m., 10 p.m. Because also in that era, in 2010, 8, 9, 10, we were not, the work from home was not an established style of working, right? So you were working from office, basically. Also, maybe a lot of information was on centralized server and so on and so forth. So every night at about 8 p.m. when people were hungry for dinner, Dipender used to observe there used to be 1 or 2 drawers in the admin area. Everybody would go and all the menus would come out, Domino's and Nerulas or whatever it is, and masala dosa, whatever. So people needed a menu to call a number and ask. So, and Dipender was a bit of an introverted person, so unka number last mein aata tha. So he said, this is enough, okay? And every day we are the most sophisticated consultants, but at 8 p.m. we are behaving like children. So what he did was one day he sat in the night after office, he just scanned all those menus and he just put it like a Google Drive in his own office. You don't have to go to a drawer. Here it is, just call who you want. It's like you have the money, there is somebody supplying to you, but you're behaving like children. So that's how he said. And it started like that. And he and his friend, they started, I think this Dipender. They started building this idea of, let's do this for consumers. Okay, there is food, people out there. People want to look at menus online, whether this is so they started like that. So essentially content, so that there are customers coming, and because customers are coming, more content. So first stage of a network effect, right? Now, a lot of people start as bloggers, right? They start as, I will build a community, right? So this is an example of what you are doing, really. You're building a community so that you attract users, right? First stage. Then they said, let's do food delivery, right? And by the way, they grew this business of listing of food. This became a big thing for them. They in fact went to other countries to do this. Like they created this service in many countries in the world, Mediterranean countries, and some more also. I don't have the exact count because they finally got out of it. So then they added food delivery, and So now you're not just using the menu and options, but you're also transacting on them, which means now they became a marketplace. Correct? And which were the two user groups? Two sides? You and me, consumers, clear. And who are the suppliers? The restaurant. Yeah, there was not concept of cloud kitchens at that point of time. So the restaurants, right? And for doing this, what am I going to? So initially, also, if they firstly just enabled commerce, e-commerce, which means you could order. But remember, you could also call the restaurant and order. All that. We are fond of saving 5%, 10%. It's who we are. It's fine. But people eventually started liking to just order on their website, right? Became easy, right? So, which means to the restaurants, they were providing a market. Therefore, they would charge, right? To you all, there is no charge because you are the consumer. You're ordering on the restaurant, but I will take a cut because I have made this happen, right? Or at least I've given the restaurant your order. So they took that. They called it advertising, promotion, whatever it is, sales fees. Then they started doing the delivery. So now I can charge you for the delivery. So my earnings as Zomato became a delivery charge and the marketing and sales charge that I took from the supplier. All that was built in the price. Initially, I would give free delivery and then I will add $25, whatever it is. And that's how the business started to grow. So, and as the transactions increased, this became like a de facto standard, right? You started getting this service consistently, the price, you're getting it at an economical price. There was customer acquisition cost incurred in terms of giving you freebies, discounts, so on and so forth. So you started liking it, you and I. It gave us variety, it gave us cost, it gave us convenience, gave us so many things, user interaction, trust. And slowly this thing picked up. So, and based on that, it's easy now for them to onboard any set of restaurants, right? And therefore, and you and I are anyway there, so they've already onboarded. So, and they say that, so they today have customers 18 million, which customers is you and I. Their restaurant partners are about 250,000 in the country, and they also use delivery partners to deliver all this 400,000. Now, are you seeing this as creating network effects, right? Right. The more this happens, the more we are there. Now, this is anyway a very good size now, so nobody can displace them, right? They'll be a very strong player in this. Okay. Now, so they call themselves a three-sided marketplace. It's a tech plus operations capability, and they are saying this is unique because number one, our demographics people enjoy. People are having such lifestyles that ordering is easier, convenient, especially people living alone, students, first job, second job, whatever. And the delivery cost is not prohibitive in India. The key reason is this. If the cost of delivery was as high as the cost of food, you would be packing your own sandwich to work. But it's not expensive. So, and there is a wide variety available. So, and at a lower cost. So you are getting what you need at your convenience. Interesting value proposition. It's a perfect value proposition. I don't want to go into their business model. Now, when they listed, Zomato is a listed company, and this is what they showed, what they were able to do in 9 months in food delivery. Okay. They said that until March 2020, we used to charge remember the average order value is about, at that point of time, used to be more like 300 actually, 300 to 400. So they said commission and all that we take is $43. Delivery is $15. This was the economics. This is what we take. Okay, so we take about $60. We spent in delivery 52 rupees. Discounts and all 21 rupees, and other variable costs are 15. So every unit order, they used to burn 30 rupees from their own pocket. This is in 2020. At the time of listing, they said, we have improved this to, these are all average numbers. So on an average, 62 bucks. Delivery on an average, 27 bucks. So both of this combined now, it's close to 90 bucks. Delivery cost was brought down from 52 to 44 on account of scale, efficiency. Discounts were reduced, other variable costs. So on every order, on an average, they were making 22 rupees as their contribution margin. This was coming to them, net of every transaction, net of paying for delivery, net of commissions, blah, blah, blah. So they were able to improve their cost structure by almost 52 rupees per order, which came into their pocket. It wrote away their losses and 22. And very transparently, they showed all this. It's, by the way, a beautiful company in terms of transparency. You will notice. And I will come to this later on. So, okay, I can run you through this. So in 24, the food delivery part in Zomato, which is about 65% of the business, turned EBITDA positive at 2.5% and also turned sort of PAT positive. So for food delivery, and this was positive quarter on quarter. So as you notice, there's a bit of kind of sustainable, it's looking like this would be the food delivery EBITDA margin, right? So if you look at an average order for food, say 600 bucks, right? 3% of it, 600 into 3%, you can do your math, about 6 into 3. So about 40 rupees is what they'll earn on each order. Are you getting me? Yeah, because it's not, it can be very like ambiguous to a common person, but if you go down, and fortunately these numbers are now very easily available to us. So what I'm showing you is all public information. It's not, I've not done any rocket science. I've just brought it together. Now, remember this 3.3% number, or even simple 3% number. So if Zomato declares that gross order value on food delivery is X, all you have to do is apply 3% and you'll know what they are earning. Okay. So for food delivery, Zomato, the way it positions it says, look, my economics is now established. This is working. Food delivery, remember. Okay. I have a large and engaged customer base, and I have good technology and operations excellence. So this is an engine that is now running. I have brought it to a point, and this will. Ayush, Irshad, Abhishek, Kritika, Alitra, and Rajiv will order every day, and Zomato will keep earning every day. This is how the business is established. Am I making sense? You're happy? Yeah. I'll give you a narration about why I said it like that. Once I was in a manufacturing company, in an autocom company, and we were trying to raise funds for growing globally. So we had investors coming in, and pomp and show, you treat them very well. And our office was in our plant only, but it was very nice, wood panel, everything, air conditioned, blah, blah, blah. So we had to just walk 10 minutes to go to our plant. So we treated them, and then I made the presentation, and then I said, let's go for a plant round. And these investors, rich people, Bombay, Singapore, Hong Kong. They said, Rajiv, we don't need to. And my promoter was sitting right there. My promoter was very passionate about the plant. He felt we really done. So I could see his face really drop. Because that's our value, right? This is, anybody can make a presentation. So, but investor, hai bhai. So I said, but why? He said, Rajiv, you know what? We can hear the sound. So we know it's working, right? And you are showing us the numbers. So as long as that sound is coming, we know money is coming into your bank account. So that's what we are here for. We are money people, right? So Finally, we took them to the plant. They were just doing baby shower because of the heat. So we took them to the plant and they were very impressed when they came back. So my promoter was top line because honestly, it was all created by his hard work. So he should be. Okay. So yeah, proven economics, quick commerce. Okay. And scale. So our class is on network effect. So you see how powerful this scale has become, right? And we'll see some numbers. I have downloaded their latest. Now we come to their friends. Okay. So quick commerce, you all know. 1 year back, we were teaching this. Teaching means explaining the model. Now you all know there is a dark store. Where is it? Yes. It's dark because you don't go there. It's somewhere in nearby. And you order and it quickly goes to the dark store where there's a pick and play algorithm that's working. People don't know kiska order hai, kya hai. Everything is working at speed. So, there are, there's a person who quickly brings it to your place. That's as simple as that. Now, people think the trick is here. It was initially the trick. Or trick means the capability to perfect. This is already perfected. This is completely perfected by everybody. It is happening at scale and speed. This is not where the now people are trying to perfect the back end of what goods do we keep at what prices. My personal view is quick commerce businesses are becoming pure play supply chain businesses. So they're becoming like sourcing businesses. They want to source bread at a lower price, milk at a lower price, because that is where they will make their killing, right? This is already done. You and I are not addicted. You and I want this service. We are already there. The delivery is working. It's already optimized. It can be optimized more. Dark store model is playing out. The unintended consequence was that people who could have locations that they could rent, they really got good rentals. So the brokers and all made money in the dark store boom. But it's played out, this model. Now, what to keep at what prices to get them? Sellers and brands also want quick commerce, so they want their products to be available. Now, this capability, sourcing and all this, it's my view. We actually have sessions with you lined up in supply chain from an ex-Amazon and ex-Swiggy guys, so you can ask them also. What are the real competitive capabilities going forward? In this. Okay. One question. Why did Zomato get into quick commerce?
Because from my perspective, because they have the infrastructure, means they have the delivery partners delivering food. So why can't they utilize the same resources and same mechanism?
Why? This is a loss-making business. Why go into it? I can be the Maharaja of food delivery with proven economics. Don't we read and strategy focus? Be good at what you do. Be better than anybody else. Bring it together with a combination of things. Why did they get into quick commerce? Yes, Surya. It's a genuine question, by the way. I'm not like. It's a very important. I think it's an important question. Yes, Surya.
Just to actually cover their.
Not clear, Surya.
Just to cover the business of you, which is likely to do, which is definitely to be good.
I think you're saying something important. I'm somehow not hearing you clearly.
So I see this is the likely business which is going to go for sure.
Okay. So point taken by both of you, I think Abhishek and you, that you're saying this is a growing sector. Right? Okay, point taken.
I think it's a strategy for customer acquisition, because if I have more of customers,
food delivery.
Yes, food delivery and for yes, it can actually both the customer who is ordering the food, he may order something else, and he's a loyal customer. I'm making more customers.
Is it a function of the network effect of my choice as a customer? Since I am kind of used to getting food in say 30 minutes, 45 minutes.
Right.
It's as an extension, it's something where as a customer, which was earlier say a 1 day, 2 day delivery of a grocery, is something that as an extension I would look for from the same set of ecosystems.
Yeah. You're making relevant points. Let's bring it together. Kuntam, you want to add?
So it's convenience business, right? And looking at Indian market trends moving or the kind of families, nuclear families that we are forming, the convenience is becoming really, really important. That is where a food
Market potential, like growth potential.
Yes, correct.
Okay. Anybody else? Ayush?
So what I think is that they are betting on that people are going to buy more and more from them, and the single order size will be larger, and from that they are going to make profits, and also that will give them leverage in getting these supplies on a cheaper and better margins from the OEMs.
Do you think they had it all figured out at that time?
I think that this may be a simpler way to think.
So it's making sense what you are saying, making a lot of sense, but that's because we are sitting today, this last 2 years, we've seen this grow, we understand these numbers now. I don't think we knew all this, but I do think that there was a view in the room that, especially after COVID, that online, and it was about online groceries and COVID because essentials, and there was a view that I think this segment will play. Food delivery is anyway penetrating.
In Zepto, there are two. They have divided into different types of ordering. One is your. They are going to give you this. If that is a small order size, they are going to charge you some things like delivery charges and all. But if you are ordering a larger amount. Above 2,000, I guess, they are going to wipe off your delivery charges and your other any kind of ordering.
Yeah, if you're ordering more than 5,000, they'll deliver a bouquet of roses also. Yeah. So that's the prime concept, right? If you're a high value prime customer, obviously any. But if you're low value, we'll not burn our pocket. We will ask you to pay us 20 rupees, which is the cost of delivery. Whatever is happening. Yes, let's go maybe in reverse order right now. So I have Ravi, Ranjit, Siddharth, you're right. So Ravi, you've not spoken.
I'm sorry, I'm away for a time. So I think one reason why they jumped into the quick commerce because their direct competitor Swiggy was there. Swiggy had already started in India. That's the reason they've gone for the acquisition of
Blinkit. So Swiggy was for almost in this race, Swiggy and Zomato, they have been looking at each other a lot. अच्छा उसने ये क्या काम कर सकते हैं because they consider both of them each other intelligent.
Exactly.
They don't actually consider each other dumb. They consider each other very intelligent. Both are housed with good professionals, good investors. So they feel that if somebody is doing something, maybe it makes sense. Let's explore it. So yes, Ranjit, your point.
Sir, they are mastering the quick delivery system because they are known to the country that they are the people who are delivering in less than 1 hour time or within minutes. So when the Zepto entered, earlier already Instamart, Swiggy was doing the grocery sale.
Right.
They have not seen the traction much. When Zepto started promoting it as a 10 minutes concept, then they thought it's a time they can do it and they can explore it, and they acquired the Grofers and they started betting on it. It also helping them in becoming more strong over their competitors like Swiggy.
Correct.
And take their advantage over them.
So, yeah, new points? Any, Siddharth, Saurav, any new point or your view?
Yeah. We'll go Siddharth first. Okay. So my view on the location basically, because their primary segment they targeted is mainly around the city, right? Like Bangalore, Mumbai, this kind of city where the life of the people, right, is quite fast and they don't have much time to focus all these shoppings, go to the store and buy it, right? So when they start feeling when the food delivery that the customer base is growing, they are also trying to focus that area, because before Swiggy and Zomato, I think the home delivery started long back by Big Basket. I don't know why they didn't focus much in that area, but they started tapping that particular segment and then come into this business. That's my understanding.
Yeah. Well said, Siddharth. So next growth frontier, if I look at it's like a next growth frontier. We have capabilities already in food delivery. Quick commerce seems to be, or delivering other essentials, groceries and others seem to be the next growth frontier. So, and my competitor is doing it, my largest competitor is doing it. And therefore I can study the model also and so on and so forth. Yes, Siddharth.
So, this is just my opinion. In quick commerce, there are four major challenges as I see it. One is logistics is very complex. Your operating cost can go very high. There are various supply chain vulnerabilities that can come into play. And then the consumer expectation is pretty high. As far as delivery goes,
in fact, food is more delicate. Bad food comes and all. There can be a lot of hue and cry. So, and food is essential also, which means if you ordered for a party, or you ordered your own hunger, and imagine if you get the wrong food and all. Imagine your state, right? And people say, leadership 101. People say, go ahead, Siddharth.
So Rajiv, taking these four things, the only thing that Zomato did not have was local presence in terms of stores or dark stores or outlets.
Right.
Rest everything they had mastered it, and they had a tech platform already available.
Leveraging capability, right?
So they just wanted to capitalize on it further and enter into this space.
So
they had a very good opportunity already ready.
Correct. So if you remember that typical growth, customer product growth chart we saw 2 by 2, you can keep the same customers and go new products and services. You can create. So it's kind of a related diversification. Growing category already, competitor doing it. I already have the capabilities. It's a no-brainer actually, except for the point is, do we make money or not, which we can study later. But otherwise, it's like a no-brainer, isn't it?
Correct.
Correct.
Yeah,
why did they not do it? Because they acquired Blinkit. Would have not been a cheap acquisition. But if they had all these capabilities, why didn't they just do it themselves?
Investing into those kind of stores and retail outlets would have been, it would have been counterproductive for Zomato at that point of time. They weren't exactly making profits back then. It was
Blinkit also at a huge price. Money is money. Whether I hire dark stores.
Is it because to capture that market share that we're talking about with Swiggy, if they needed to be there within that short span of time, they needed that acquisition?
Were they like kind of what do you call that? Were they really I'm looking for the right word, keened by their investors and say, what's the
Yes.
Because once you have investors, now in the board meeting every 3 months you have to face them.
Yeah.
They will come. They'll come in with leaps and bounds, right? And they'll be waiting for that day, because that's the day they have you in front, and they have the right to question you on everything. So
another point.
Yeah.
Sorry. I think another point was that they even tried a pilot with their food delivery of that 19 minutes, 20 minutes, or money back, or stuff like that.
Yeah, I remember.
And once they've understood it, then Blinkit happened. Now again, we are back to that where food has those Zomato Quick and Swiggy Bolt, which are on and off going on. But initially, that model was already there before the quick commerce acquisition happened.
Okay. So a few confessional things here, and we've learned this from none other than the founder itself. So Dipinder Goyal, and I would, in some sense, I've not worked with him inside, so I don't know what is he to work with as a leader and so on and so forth. But just from the outside, and I find him very interesting because he's very strict. So very strict. Okay, and. The reason is, the main reason he gave is that they were scared of Blinkit. They were not scared of Swiggy that much because that's fine. Because they felt that, so two reasons why going into quick commerce was appearing to be a no-brainer. Two choices. There is a player available, Blinkit. Acquire, obviously it will not come cheap, because Blinkit understands its positioning. Or
back then, right?
Or organic, right? Yeah, no, it was Blinkit by that time.
Okay.
It was Blinkit by that time, and what they saw was this category from 19 is when Blinkit started. So from 19 to 21, it had grown, which was at that point of time the next day delivery model, and then 21 to just about the first year, when this had become more quick commerce, they had grown 147%, very high growth. Remember, startups love to track this metric. Remember what we said, product market fit. When growth is happening, you are doing something that the customers want. You may not be making money, that's for you to solve, but customers want it. Unless you're giving it for free, right? These were not services for free. Now, they compared, and they felt that, what we took, like a decade, the gross order value of food, we are here. The gross order value of quick commerce is already here. So 63%. So they felt that, now this was their analysis after going through the process of quick commerce delivery via dark stores versus food delivery via restaurants. They felt quick commerce can easily do food delivery, but food delivery may not be so easily able to do quick commerce. And this was not just an emotional view. They analyzed what it takes to do this quick commerce thing about the dark store to delivery partner integration, the making and unpacking things very fast, sorting, collecting them very fast. So the dark store operations and also replenishment, all these capabilities Zomato didn't have. They had the capabilities of food ordering, food pricing, that part they had. And they looked at their capabilities, food delivery, they looked at quick commerce, forget revenue and direct costs. I think, they looked at this chart. They said Blinkit has sourcing capability, dark store network capability. We have last mile delivery, low customer acquisition cost, and repeat behavior. They also have repeat behavior. Their customer acquisition is actually higher because they have a lower user base. They've got a robust tech stack. Zomato Blinkit is also an example of a capability acquisition, and which gave them the strength. Now you look at the combination, it creates a much smarter machine, right? So they paid for it. It didn't come free of cost, but it created a very smarter. It's a very strategic move, actually. And hats off to. And I think Dipinder and his team saw this better than the investors. So they saw this better. So now I will. Okay, one more business of Zomato is called Hypopure. Okay, it's still a small business compared to their other businesses. But what they are doing in Hypopure, do you all know Hypopure a bit? So, another example of network effect. So, they were already using the restaurants, right? They already had the restaurants onboarded. They were already interacting with the restaurants for different things. Now they offered us, they were also interacting with the customers for quick commerce like groceries and so on and so forth, right? They're taking this capability, they're taking this customer base, and they're saying, look, you all, restaurants, food, cloud kitchens, and so on and so forth, you also need to procure your rice, your wheat, your bread, your potatoes, tomatoes, onions, blah, blah, blah. Right? You are good at menu fixing, cooking, blah, blah, blah. Why do you want to waste your time in procurement excellence? We will get you the stuff, hyper pure, fresh stuff, what you need as a service. So the hyper pure service, the customer is the restaurants. So the restaurants, which are part of their supplier network in the food delivery service, are part of their customer base in the hyperpure service, right? And the same people they source material from, which they source for their quick commerce or can source for their quick commerce. So this is a direct play, and now Swiggy has also offered this. I don't know what they call it. I don't know, but it's exactly the same service. So now similarly, there's Swiggy. This all so Swiggy calls itself like a one app, super app, and is the same business model. So I'm just putting the, this was at the time last year, so 2 financial years, and at that point of time, Zomato market share, between the two, Zomato was 55%, Swiggy was 45%. And you can see the network effects. So look at the number of users. So Zomato about 20 million and Swiggy about 15 million, and some of them are common. These are the restaurant partners, 250,000 and 200,000, and some of them may be common. And then there is delivery partners, and overall orders 750 million, 600 million. So very large network effect. In terms of size of business annually, until 24, Swiggy was 13,000 crores or 12,000 crores. They were about 30,000 crores. They were slightly positive. Swiggy was negative, and this was at the last year thing. At the time of listing, Swiggy's listing, Zomato in a quarter was making 250 crores. So I just did a math and I said that they are running at about a 1,200 crore EBIT. I don't know if this will come true, but and Swiggy at that point of time was losing every quarter about 600 crores. So, but very powerful network effect. Started from convenience, started from needs, but grew very well. Now, are they going to eat each other alive? Obviously not. They are coexisting. They will coexist. We've had a duopoly in soft drinks since like multiple decades. Both coexist. So duopolies exist, but I think quick commerce is no more a duopoly. Zepto is big, and Zepto is putting in a lot of money in quick commerce. In food delivery, I would say we have, I know this is numbers heavy, but I'll just take a minute, and this is the latest position as of December, because very rarely do you find two companies in identical business, in an identical market, and both sharing segmental details, literally identical breakup. Not the numbers, but the level of detail, right? So I put Zomato on this side, and I put Swiggy on this side. Okay, for exactly the same business. Q3 FY25 means December 24 numbers, and likewise, right? So gross order value in Zomato is about 9,900, say 10,000. What was the EBITDA number that I gave you all when we were doing the slides? About 3 to 3.3%, right? You can see this. So for a 10,000 crore, if it's 3.5%, you should automatically calculate they're earning 350 crores in food delivery every quarter. in this quarter, their average EBITDA was 4.3%. So they're earning about 400 crores from food delivery. Doing nothing. They're just delivering you food. I mean, not doing nothing. They're delivering you food at scale. And what is our friend? Our friends in Swiggy earn about 2.5%. So Swiggy is earning about 240 crores because Swiggy's gross order value is about 7,500. So Swiggy is slightly smaller, both in size, also in earning. Same business model, right? In terms of customers, monthly transacting users in Swiggy is about 15 million. In Zomato is about 20 million, which shows the size. And restaurant partners, they are 300,000 to 50,000, not much difference. There's somewhere we have average order value. Okay, average order value is about 500 still in food business. So, you understand the food delivery part now. Both are making money. The Swiggy is making less money than Zomato. Swiggy is also slightly smaller than Zomato. You're okay in this understanding? Okay, let's come to quick commerce. Okay, firstly, both are losing money. Okay, now quick commerce. Now look at the food delivery business. In a quarter, it's 10,000 crores order value. In quick commerce, it's about say 8,000 crores for Zomato Blinkit. It's about 4,000 crores for Swiggy Instamart. So Swiggy Instamart is half the size of Zomato Blinkit when it comes to quick commerce, right? In terms of adjusted EBITDA, they have been negative, and quarter three. So I don't know what to make out. There is a bit of variance here, but let's just call it negative. Though the way Zomato presents it, we're just there, right? So they're losing about 100 crores every quarter at this volume. You can look at Swiggy. Swiggy is losing 15%. So Swiggy is losing 4,000 crores, 50%, about 600 crores every quarter. This about that much. I'm sure the number was there somewhere, but maybe I've not been able to capture it. In terms of dark stores, in terms of sheer numbers, I think it is somewhere here, but yeah, stores, about 1,000 in the country. Dark stores is about 700. So between the two of them, 1,700 dark stores. Average gross order value, good metric. Okay, per day per store. Blinkit had 900, 920, 950, 981, 970. Slowly inching up. Average order value. Average order value. 470, 470, 480, 490, 530. So what's the secret sauce in quick commerce? It is this number. I.e., it is the assortment that you are telling you are keeping, and therefore you are doing it for quick commerce. If that assortment goes up in higher margin, this 500 will start inching towards 1,000, and this loss will start getting wiped out. You'll come close to this. I think that's how I unpuzzle this. But you could have your own conclusion. But clearly, in quick commerce, it's about just getting this right. The only worrisome point is not worrisome point, but point of reflection is: are we topping out, or are we stabilizing? And is this how it's going to play, or there will be some more innovations? We'll see. We don't know. So completing the thoughts on network effects, they are a powerful force. They are, and if we can latch on to a business, or we can create network effects through the digital enablement of our business. It's a powerful strategic advantage. Not all businesses will have this, but it's a good understanding to have of this force. We saw a delivery, a three-sided. I should probably put fleet also, but fleet I think is capability. But this, because this gets in a set of users to them. This gets in a set of users. This gets in a set of users. Network effect is between two user segments. And we, the creator of the network effect, is sitting in the center. So it's a little bit different from capabilities. Zomato, just content-driven network effect, then more content, delivery-driven, and then of course, quick commerce got added. Then they added the Hyperpure, and now they are saying, well, if you look at their latest presentation, they'll show you district also somewhere, going out. Yeah. Going out will be shown as a district. So they'll say eating in. Everything in your room is this, which is food delivery and quick commerce. In your room is in your home, out of your home. And this is, of course, another business. So I would like to stop here, pause here. Yeah. Did that give you some idea on? I'm thinking on. Yes, Avinash, your hand was up for very long, sir. So sorry, I'm coming to you now. Yeah.
Actually, I just wanted to know why Blinkit gross order value is more than Zomato. Sorry, more than Swiggy.
Just repeat why is Blinkit growing more than Swiggy?
Yes.
Through their offerings. They're offering more product assortment. What do you mean why? They're able to do it. There's no why here.
See, my question is, Swiggy is the first mover in this space, right?
And you're not very clear, Avinash.
He's saying Swiggy was the first mover in this. So why?
Who was which biblical saying or Bhagavad Gita or Quran saying has said first mover is the winner? Where is it written? The data is completely different.
No, my question is...
First mover has an advantage. It's never the winner. Or it can be, it cannot be.
Yeah, I understand. But how they overcome the Swiggy?
I think Blinkit is very good. It appears, I'm only using numbers to work backwards. Okay. It appears Blinkit is able to crack the quick commerce faster. In what? Number one, first in terms of scale. But scale can give you size. Scale will not give you average order value increase and will not give you profitability. It will give you size. So if you want to look at number wise, one is 2x from the other. So one difference is penetration, so scale. But the more important difference is assortment. Assortment is the hardest puzzle to crack. Remember, in food delivery, the assortment was coming from restaurants. I didn't have to do anything. I mean Zomato or Swiggy. We don't have to do anything. More and more restaurants come in. I just help you curate your menus right, maybe give you some pricing guidance if you're off the whack. If you ask me for guidance or consulting, I provide to you. Your food, you guys want to order, I'll just make it happen. Take my commission from this side, take delivery from you. Works. But in quick commerce, I have to decide what to keep. Should I keep incense sticks and candles? Should I keep batteries and cells? Should I keep kurtas and shirts? Grocery is well understood. That both are keeping. Right? Should I keep band-aids and Disprins? What should I keep? And then whatever I'm keeping, you're not going to pay me extraordinary prices, right? You may just pay me kind of close to MRP. So I have to deliver to you and make money, which means I have to source them at a more optimal price. So whoever is developing these capabilities, these are capabilities. These are not trial and these are not, let's try it out. This is not that much a tryout space now, according to me. This is a play of capabilities that is happening. And I mean, what we listen to, those are nice news. You are selling a phone on whatever. I mean, Blinkit will deliver you phone in 10 minutes. Fine, all of that is fine, but that's not where the large impact on business will come. Those will be a few orders, right? So between Blinkit and Swiggy and this, whoever is getting better at these capabilities will produce a better result. And this business model still has to make money. Can it? I think it can, because it is reaching a certain scale. Users like it. Users are not giving up on it. In fact, users are getting added to it. So consumer behavior is not in question. Consumers are keen. Therefore, so the market is there. There's a size of it. Now we have to be able to make money from that market. We are not producing these goods. We are only quick supplying these goods. So I have to source them well, stock them well, and manage my delivery cost. I think the delivery is sorted. I think the back end is capabilities. So maybe Blinkit and Swiggy, Instamart are hiring people, category managers from, or supply chain managers from HUL, from, Bharti, or I don't know, ITC. Mujhe pata nahi, I don't know enough, but these are the capabilities they must be getting now. My guess. And that's why I asked if somebody is working in these companies, maybe you can give us some more insight. And but great companies, by the way, great companies, and the market is liking them. It's not penalizing them for their current losses, so it's keeping the faith. Yeah, the third one is going to get listed, right? Zepto will get listed. Very rare will we have 3 companies giving every quarter to us a snapshot of this business. So, the reason we are able to talk so confidently about what's at the back is because the numbers are so easily available to us, right? And in detail, they are not even giving us numbers at the high level. They're giving us, actually they upload a KPI book on their website. And the reason is because Dipender Goel started it. So from Zomato. So Swiggy has to keep pace with it, and Zomato will have no option. So every quarter we can see these numbers. So yeah. Yes, Ravi and Aditya. Avinash, did that help you?
Yeah. Yes, sir.
Yeah, it is. I think a year back when we made a presentation on quick commerce, we said that it appears that the secret sauce is going to be assortment, which means order value. And at the back, at what price are you sourcing it at? So, and it seems to be moving in that direction.
Yeah, now I heard that even Amazon is entering into this business.
Yeah.
They have already entered. Amazon now, Flipkart Minutes.
Flipkart Minutes.
Now.
Yeah. So basically the delivery expectation, everybody wants to meet quick. Quick doesn't mean 10 minutes. Don't get me wrong, or don't think quick is only 10 minutes. It's quick enough. So same day, white goods is very good, yeah. Even next day is probably good. I don't know. But they are all, so traditionally the logistics and supply chain part was mainly about optimizing that box of products. They're saying, you know what, we can be a bit more flexible here because the customer is okay. So, but if we don't meet the convenience metric, they will not prefer us. So nobody wants to lose customer, right? And And yeah, it's now, there used to be earlier just the hub and spoke thinking in supply chain. Then it became the big hub, the mother warehouse, nearby your cities, smaller warehouses, and then, small dealer. Now, dark stores are present. So it's just more enablement. Right? Yeah. We know in India, delivery partners are not going anywhere. They are happy to earn. I think typically a delivery partner, we looked at some numbers, they earn between 15,000 to 20,000 a month. And they choose to do it. They are flexible service providers. They're not they choose to do it, which means this earning is the best alternative they have. To maybe till about 22, 24 with incentives and all. I don't know if I remember these numbers. I don't have them on a slide right now. But there were analysis done of what they are earning. And they are there, right? So, yes, Ranjit Ji. Ranjit Siddharth, Aditya Ravi. Yeah.
Sir, this JioMart, they launched it.
Yeah.
They launched it quick. And they are not charging any delivery charges, or they have not kept any minimum order policy. And they are also present in tier 2 cities.
Yes.
And what's going to be the future impact on these players like Swiggy and Zomato or Blinkit?
It's a good question because, it's not differentiated enough, isn't it? So maybe we will segment our needs, right?
In fact, they have JioMart stores in most
of the locations, so they don't need
any dark stores also.
So whichever I like, right? I won't be looking at the price that much, isn't it? It's my friends are there, my children are there, party happening, right? That's a certain need, isn't it? And when we are ordering groceries, if it's slated delivery, one segment will order from the place where budget basket is the minimum, right? It could be JioMart, Milk Basket, Big Basket, whatever it is, right? But there's a segment that, works and, orders groceries when they're coming back from work. They will order. So it's going to play out. But I think, for example, Jio will have excellent supply chain capabilities at the back end, isn't it? They're pan-India player in consumer. So, and they will have private label. So Jio has private label, isn't it?
Yeah.
It's just Jio.
Good lines they use for some products.
Correct. So they have private label which means their pricing will be the best. But they may choose to play in the 10 minutes, 20 minutes, 30 minutes, or just choose to play same day, slated, slotted. Let's see. There are,
They started a service called Quick.
Yeah.
With a 10 to 30 minutes.
Yeah. I think everybody has felt that the Indian consumer likes it quick. So the quick enough is what they will perfect their model at, everybody. And there's always room for more than one. But this is, and I don't think they will eat each other. So nobody's going to start offering things for free, is what I feel. But I guess, there's enough players now in this market.
And they haven't earned the loyalty of their customers yet. People are easily jumping from Zepto to...
Switching cost is zero.
Yeah.
Switching cost is literally zero. Yeah.
And just two bits of trivia as such. One is, this is not so prevalent even in the developed countries in terms of this. So it's
not prevalent at all.
Yes.
Yeah.
In fact, most of the places, they don't even think that they require 10 minutes, 15 minutes delivery.
Right. But the cost of delivery will be higher than the good.
Much higher. Specifically, the gig workers' cost is very high. That is one thing. And the second thing is, even for grocers, they had acquired something called PaperTap, which was a lateral acquisition, which helped them increase their bandwidth.
Right. Grofers became Blinkit, right?
Yes. So
Yeah.
Paper Tap was acquired by Grofers.
Right.
It expanded. Then they became Blinkit and finally got merged into.
Yeah, they said the word stands that before you blink, it comes. It, right? So Blinkit, nice word, interesting word. Whoever gave it to them, it's nice.
Yeah.
Instamart came from the word Instacart, which was the US service. So that came from there. And such in Instamart is kind of everywhere, like globally there. But yeah.
I can't hear him, or he's not there on the screen. Right, okay. All right, it's with everyone.
I was checking my connection that something went wrong with my connection.
No. I think it froze.
Something wrong from Rajiv's his connection.
We'll wait.
Sorry, I got logged out. I apologize. I was looking at Siddharth getting logged out, but it was me who did. So, sorry. Yeah. You all laughed, had a good laughter moment.
No, we were actually
contemplating that something went wrong with our connection. All of us were fiddling around with the screen.
Otherwise, as they say, when the cat's away, the mice need to play, right? So maybe that was in action. But okay. Yes, Siddharth, you were saying something.
So, just a quick thought, and I wanted your views also on the same. This is like, as the players are increasing, there's a terminology which you used in the beginning of the class, and it's going to boil down to that as far as quick commerce goes, which is operational efficiency. And I'm saying this from a perspective that being a service partner with Zomato, we know Zomato as well as Blinkit. Okay. Both of them. So we know what happens in their FCs, fulfillment centers, and their dark stores. I mean, they've got very, very small issues which leads to large losses. Like, I'll give you an example. They are supplying perishable goods to the users, paneer and ice creams and all these things.
Yeah.
It's all kept in deep storage, deep freezers.
Yeah.
They're facing losses for very, very small problems. It was a quick delivery. The person
went inside,
forgot to close the door again.
Correct.
Did it 3 times. 4th time, the compressor went off. The entire cold storage inventory conked off.
Yeah.
So the margins are not supporting that much. Now, these are things, just basic operational efficiencies on the ground, that how quickly the manpower works and how the training goes.
Yeah.
So, that being said, I've been trying to work with them for quite some time and figure out, how to work out service economies to, complement the price war which is happening parallelly in terms of delivery surcharge.
Right.
And what are your thoughts on that front? That is the Indian consumer going to accept that delivery cost increase, which is going to come eventually, or is it going to be a reason for these services to go down now? Because as much as convenience is an important factor, cost in India is also known to be one of the most cost-sensitive markets.
Yes, it is. It is rightly so. Yeah, rightly so. So firstly, there is already a scale in these companies. There's no question on that. When you're operating at scale, so when you are not operating at scale, let's look at strategic thinking two dimensions. You're not operating at scale. Let's say Swiggy was not operating at scale and was losing such a large portion, right? Maybe after a year, the investors, the founders and the team would have come and said, why don't we give it up? Let's let others do it. This is strategic thinking also. When I'm not operating at scale and I'm making losses, I can say, let's get out. Firstly, financially, we'll just become much more healthier because I'm burning, right? First point. Financially, I'll become healthier. I can pick up my capabilities, tech, people and all of them and concentrate on, is there a segment that, a niche segment, maybe this delivery of food and all, farm to fresh or something like that. Let me go into a space where I'm not making this much losses, right? Because the losses are on account of three factors. There's either a service loss, means operating, which I can fix, right? But I can't make it zero, right? Or I'm doing customer acquisition, which means I am paying to keep the business or get you as a customer. So that can go down with scale. The first one will have an optimal thing, right? And the third one is I'm unable to do all the, I'm not able to bring in good assortment prices and stuff like that. So the exit is also a good strategy.
So Rajiv,
but the problem is they are operating at scale. They have scale. When you are at scale, the push will always be, let's set the first tab will be, let's operational excellence, let's set it right. That's the first thing everybody will act. It's called what we call in strategy performance gap. Like this, so they will put in automation, they'll put in technology, they'll put in data, they'll put in people, projects. Operationally, they'll become better. So if there is a 1 to 2% performance gap, which is on account of stuff that you are saying, or still optimization is needed and all, they will plug that. That's measurable, it's easy. It's not easy, it's measurable, it's doable. That doesn't mean it's easy. But they will plug that, right? The other problem that they will not be able to get out of is comparison. We sitting in a class in 15 minutes are comparing these statistics, correct? And we are making some thoughts around it. So those people are experts, right, in their own business.